I mean, look, since they started cutting rates, you've seen the repo volume that has absolutely exploded. One of the biggest Canadian banks is coming out and saying that there's going to be huge interest rate cuts on the way. So let's get into what exactly they're saying here. Bank of Canada to start jumbo rate cuts by December, says CIBC. They say it's time to declare victory on inflation. Obviously, this comes after the Fed cut rates by 50 basis points a couple of weeks ago, and they're now saying, well, the Bank of Canada is likely going to follow. And I don't necessarily disagree with what they're saying here when you look at what the Bank of Canada has to spin a narrative around cutting rates even faster. They definitely could be doing it. So one of the country's biggest lenders says the Bank of Canada will accelerate the pace of monetary easing in order to stave off a recession. It's kind of hilarious that Bloomberg comes out and says that they're trying to stave off a recession because, as we know on this channel, Canada is already in a recession at per capita terms, but in reality also, and it's heading into likely a depression when you look at the data and you look at how far lagging it is and how manipulated it also is as well. So incredibly interesting. Canadian Imperial Bank of Commerce says policymakers led by Governor Tiff Macklem will reduce the policy rate by 50 basis points at each meeting in December and January, according to new forecasts released Thursday. The lender expects the central bank to end the easing cycle next June with a policy rate of 2.25%. The pace of cuts is faster and deeper than what most economists expect, according to Bloomberg's survey last month. But again, you have to remember that the yield curve has just uninverted. So we've just had the yield curve that is uninverted, which tells us, as the data, as I showed you, that we are typically going to have a recession within the next 6 months, at least if you go back all the way to the 1990s and beyond. That has been the case. You've seen the recession occur within 6 months of the yield curve uninverting. You've also seen this happen in the United States as well, which is Canada's biggest trading partner. So when you really look at what's going on in Canada and you look at interest rates, you've got to think what is going to happen with the economy, how they're going to spin a narrative around that. And I think, you know what? They could see rates which are a lot lower than even that. It would be substantial cuts getting down to 2.25%, but that could not be far along on the horizon, especially if the economy gets worse and worse and worse. And if you look at the trend of unemployment, you don't have to be a rocket scientist to work out that that is likely going to be the case. You're going to see this trend continue of unemployment getting worse. And because of the lag effects from the Bank of Canada's rate hikes, you're likely not going to see the unemployment peak out for at least a year. And that's even if they start cutting rates, because people mistake that for stimulus. It's actually trying to counteract the increasing counterparty risk, which you're definitely seeing across the Canadian banking system. I mean, look, since they started cutting rates, you've seen the repo volume that has absolutely exploded. Unfortunately, we only have data that goes back as far as 2020 for this, which is unfortunate. But you can see we've only had this spike a couple of times, and it's been never as near high as we're seeing it right now. We're seeing the repo market volume that has absolutely exploded. And basically what that means is the Bank of Canada has to keep intervening in order to keep the overnight rate down. They have to do that to keep the rate down, because it would be a fact that the rate would actually increase because people don't want to lend. So why do the Canadian banks, those oligarch banks, not want to lend? And it's because of the increasing counterparty risk. Obviously, there are so many dodgy mortgages, and we're going to get into another video this week which you have to see. And thank you to one of you guys. Another dodgy mortgage has been unveiled by a Canadian mortgage insurer. Are we surprised? Absolutely not. So it is really time to declare victory on the battle against inflation and get the economy moving again. And these chief economists, I mean, think about it. They're getting paid hundreds of thousands of dollars, and they're still saying, oh yes, if you just cut rates, that's going to get the economy moving again. I mean, just cutting interest rates will not get the economy moving again. People mistake this time and time, and it's really, really obvious that the thing that's going to come that eventually will get the economy moving, but it will be completely artificial, is going to be government stimulus. And that really doesn't matter, you know, who's in charge at that point, politician-wise. It will be government stimulus, because if it really comes down to it, are they going to choose to have on their hands a major recession when everybody's looking at the government and saying, fix my problem, government? They're just not going to stand there idly and say, no, we're not going to do anything. They will move in with government stimulus, and we've seen that already happen. And Alberta, again, is a great example of that, because that's a so-called conservative province that has been loving stimulus, absolutely loving it since 2020. So it's interesting also that they say it's time to declare victory against inflation, because when you look at inflation this year, it's actually been pretty strong. Yes, we've had a couple of months where it's been negative, but not as much as last year, actually. Inflation was much weaker in 2023, and in 2024, it's gone up a lot. And you have to remember, again, what the Bank of Canada has had to do in order to get inflation down. They have had to crush the consumer and crush the economy. And essentially, when they undo this, you're going to be left with still a crushed economy. Just because you bring down those rates doesn't mean the economy is going to come roaring back again. At the end of the day, a lot of the inflation that we saw throughout 2021 and 2022 was actually due to what? It was due to supply chain issues, the circumstances that happened during the pandemic, the fact that a lot of goods and services weren't being created, yet you still had the money that was being given to people in terms of stimulus. So it'll be very interesting to see what happens. Obviously, we know it's going to have an inflationary impact, but is it going to be the same as in 2021, 2022? Is it going to have the same impact on inflation when the supply chain situation is actually fairly normal, where there's an actual surplus of supply of goods, especially that are out there? I wonder if it's going to have such a big impact. I mean, it might not have such a big impact, but again, we're living on a knife's edge here, and we don't really know what the catalyst is going to be, what the apex event is going to be for this recession. We know it's going to be some type of financial crisis, obviously, but where's it going to be? Is it going to be in commercial real estate, residential real estate? Where's it going to be? I mean, it could be in all of them, especially when you look at private debt. The forecast change comes amid mounting concerns that Canada's labour market and growth are weakening at a quicker pace than expected. Last week, jobs data showed the economy added 22,100 jobs in August, and whilst there's no widespread layoffs, the unemployment rate jumped to 6.6%. And obviously, we've been talking about the unemployment rate, and this is not accurate at all, but it gives you an understanding of where the trend really is. So the rise in joblessness is concentrated among young Canadians and newcomers, but it's also spread into prime age workers, Schenfeld said, adding that Canada's unemployment rate could rise to 6.8 or 6.9% in coming months. And bear in mind that the country is incredibly bifurcated as well. You've got certain provinces where unemployment is extremely high, and then you've got certain provinces where unemployment is just completely flat and it's not really done anything all year. So it's very interesting when you think of that dynamic. You could have some provinces that are in extreme recessions where others are in recessions that aren't too bad. I mean, provinces that tend to go into extreme recessions are places in the East Coast, places like Alberta also. Obviously, that province has been heavily propped up by lots of people moving to it, which just provides that sugar rush temporary growth, and it will be interesting to see what happens there. So obviously the economy is not looking very healthy at all, and the Bank of Canada could be cutting rates substantially in the coming months or coming year. And obviously with an uninverted yield curve right now, we know that the time is ticking. What do you think is going to happen? Leave a comment below. So if you've enjoyed this video, I would highly recommend that you check out this video here, and if you're looking looking for a VPN to protect your privacy, go to expressvpn.com/marketmania. This was streamed from ExpressVPN. I will see you in the next one. Take care.